Hello there, this is binaryoptions.net.au, and we are continuing our How to Trade series, a timeless series, basically to look at different currency pairs and then moving forward to look at indices, equities and so on, and to note what are the important things to take into account when trading those currency pairs, either as a spot on the spot market or as a binary option. So if you want an educational material, and so far we covered the euro US dollar, so if you go on the YouTube channel and Google on our channel how to trade the euro US dollar, you will have it there with all the features and fundamental analysis as well. Now this one is the Great Britain pound US dollar. What's important to mention or to keep in mind with the Great Britain pound US dollar is that it is sometimes being referred to as cable. Now why cable? Because actually the financial communication or quotations for the first time between London and New York were made using a physical cable that was laid down on the bottom of the ocean. The Atlantic Ocean, of course. Now the Great Britain pound US dollar currency pair represents basically one of the biggest economies in the world, and therefore it is moving based on the differences between the UK and the US economy. And just like that, we already know that when you want to buy call options or put options on this currency pair, you need to take into account the economic news and what's happening with the economies in those parts of the world. So basically, let's write down that the first thing that is important here, that Great Britain pound US dollar, it is moving based on the differences or economic differences between US and UK. So if, for example, on one day on the European session, during the London session, you will have negative news out of UK, and therefore the Great Britain pound should be sold and Great Britain pound US dollar should go to the downside, then a couple of hours later or 4 hours later you will have maybe an even more negative news for the US dollar out of the US session, and that will make the pair actually move to the upside. So very careful on the economic calendar what to look for. The differences between the US and the UK economy are reflected also in the monetary policy being set by the two central banks. In the United States we have the Federal Reserve, and in Bank of England we have in England we have Bank of England. They are meeting regularly. In the UK, Bank of England, it is meeting on a monthly basis, usually on a Thursday. It is meeting 45 minutes earlier than the ECB on the first Thursday of each month, with rare let's say differences when it is not meeting on Thursday. So number two, or the second thing that influences the Great Britain pound US dollar, stays with the central bank. So Bank of England is meeting every first Thursday of each month. Now it is important to note something. If the Bank of England is not changing the monetary policy, then, or not changing the interest rate and the monetary policy, then there will be no press conference. So it doesn't make any sense to wait for a press conference like it is in Europe. In the ECB is mandatory to have a press conference, not in UK. Lately or nowadays, starting with this year, Bank of England is supposed to present its minutes of the meetings, which will make it a bit more interesting for the market, because they didn't move on interest rates for quite so much time now. So the general public or traders really had no idea what to expect from Bank of England anymore, because they met and they let the monetary policy as well. Now with the minutes we will have more details. Now What's important to mention is that cable is a currency pair with a bigger volatility than the US dollar, and this comes even from the fact that the spread is bigger on when you are trading Great Britain pound US dollar, or when you are trading the euro US dollar. So it is more volatile. In this, to know that if you are trading with average, with moving average, or if you are trading with true average ranges, to know that on the Great Britain pound US dollar you need to take into account more or a bigger volatility than the regular euro US dollar. So Great Britain pound US dollar is more volatile. That means that if you are trading binary options, you should take into account a bigger expiration date than when you're trading Great Britain pound US dollar than when you're trading some other currency pair. It is very important to note also that the Great Britain pound US dollar, or the UK side of the story, is referring to an economy that is a service-based economy. The UK is a service-based economy. That being the case, you may ignore or not ignore, but don't get over or don't overreact when data like PMI construction, for example, or PMI manufacturing or industrial production comes lower than expectation, because what matters the most for the Great Britain pound US dollar or the Great Britain pound related pairs is the services sector, as again the UK is a service-based economy. So this is extremely important. Number 4, UK is a service-based economy. So if the PMI manufacturing comes lower than expectation, but then PMI services come beating the expectations, I will stay with the services, because that will have real roots in the UK GDP. Now, the most important events to be watched, economic events to be watched on UK are the following. So most important events, economic releases in UK. Now the first thing, of course, it is the CPI, or inflation. Now the inflation is being released on a monthly basis, and it refers to the rising prices from the previous period. It is extremely important because traders, based on the inflation level, will try to have an educated guess about what the Bank of England is going to do at the next meeting. The lower the inflation, then higher the chances that the central bank is going to ease the monetary policy. The higher the inflation, then higher the chances that the central bank is going to raise the rate. So inflation is number 1. The second thing to watch is the GDP, and the tension here, because on UK it comes on preliminary and final. That means one is an estimate and the other one is the actual number. Rarely, I've seen cases, but rarely the final is different than the initial preliminary. So preliminary is much more important in the sense that that release tends to stay there. Then of course the jobs data is extremely important in any economy, and UK is no different. What does it mean, the jobs data? Well, jobs data in UK, because this is British of course, in UK it is being called a bit different than in the United States or in Europe. It is being called the claimant count change. Claimant count change, but actually represents the number of unemployed people, of course. It is a fancy number, but it is released on a monthly basis together with the unemployment rate. So this is important as well. What to look for next in UK is the PMI. That goes for services, manufacturing, and construction. Now the PMI services again is by far the most important one because it refers to the service sector. What does it mean PMI? What's this PMI? PMI stands for Purchasing Manager Index. It is actually a survey, and this survey it is, or let's say that the purchasing managers in a specific sector, in the service sector, manufacturing and construction, are being asked questions, and they are obliged, they are forced to answer by law. Questions like how is the business doing, if they are planning to employ people, or how is the level of inventory, how do they see the sector in the next 6 months, and all this kind of stuff. Based on the answers being given, a pool is being made, and an average result is being interpreted based on the 50 number. Anything that goes above the 50 shows expansionary territory. Anything that goes below the 50 shows contractionary territory. So in one way, boom, in the other way, recession. So PMIs during the trading month, between the meetings of the central bank, will make you have an idea what the central bank is about to do, because you already know if the economy, if the PMI services is going, for example, it is released 57 on the previous being 50, then that is bullish for the currency, as it signals the economy picking up. If the economy picks up, consumer picks up in spending. If consumer picks up in spending, then the more jobs are being created. If more jobs are being created, inflation is going to be created, and the central bank is going to come to act to hike the interest rate. Hiking the interest rates means stronger currency, as anyone wants to own a currency that is being paid a bigger interest rate. Now this is on the Great Britain or on the UK side of the story. How about on the US side of the story? Well, like mentioned on the Euro US dollar as well, the most important in US are the following. The core CPI. It is inflation, basically, but in the United States it is being interpreted as core CPI, less energy prices, so it refers to food and so on and so forth. It is the favored or the preferred move for the Fed to interpret inflation and to act on it. The non-farm payrolls, NFP, non-farm payrolls. The non-farm payrolls are being released. The non-farm payrolls number is being released on every Friday, on the first Friday of each month. Basically, this coming Friday, as we are on the 2nd of February, so this coming Friday we should see the non-farm payrolls being released in the United States together with the unemployment rate. It is extremely important for the Fed decision because the Federal Reserve has a dual mandate. The dual mandate comes from the fact that they target inflation below or close to 2%, but also their job is, or their mandate is, to create jobs. So they will set the monetary policy based on jobs and inflation. Now, this being the biggest central bank in the world, then definitely what the Fed is doing, other central banks in the world is going to follow, and hence it is important. Then we have definitely the GDP, the value, total value of goods and services an economy creates. Then the ISM, manufacturing and non-manufacturing. ISM, manufacturing and non-manufacturing, basically represents the PMIs, but this is the equivalent for the United States. And then the durable goods orders. These are the main thing to move the US dollar, and you gotta take them into account. So Bank of England is meeting every first Thursday of each month, and the Federal Reserve is meeting every 6 weeks on a Wednesday, and every 3 weeks minutes are being released. What does it mean, minutes? It means we don't actually know what these guys are discussing in such a meeting exactly when the FOMC statement is being announced. But what we do know is that 3 weeks from, like it was the FOMC last week, so 3 weeks, 2 weeks from now basically, because it's already 1 week past, so 2 weeks from now we'll have the minutes, and we will get the chance to know the details of that meeting, and what they discussed regarding hiking the interest rates and so on and so forth. Well, these elements are repeating on a constant basis. So besides the technical analysis part and the fact that this is a more volatile pair, these events are key in trading Great Britain pound and the US dollar. Thank you for being here, and let's try to move to other currency pairs like US dollar, Canadian dollar.